everyone, welcome back to Mindful Investing. Today, in our stock prediction series, we are diving into a company that's leading the way in the AI driven automation revolution. A business I believe has the potential to become a major long term winner. That company is UiPath, ticker symbol PATH. This stock is up about 13% year to date. And before we get into the details, I want to take a moment to thank all my subscribers who mentioned this stock in the comments. Your suggestions help me discover amazing companies like this, and more importantly, they help everyone in our community to learn and grow together. Now, UiPath has been making some serious moves lately, partnering with NVIDIA, OpenAI, Google Cloud, and Snowflake, four of the biggest names in AI. With these kinds of collaborations, it's no surprise the stock has caught investors' attention. In this video, we'll go over UiPath's business model and where their revenue comes from, their balance sheet and financial health, my price targets for 1 year and 5 years using my stock prediction model, and finally, whether this stock deserves a spot in my portfolio. I've also created a spreadsheet that tracks all my predictions, including my returns and average prices for every stock I own. You can check it out using the link in the description and feel free to bookmark it for future reference. Alright, so let's dive right in. Now, before we get into the numbers, let's first understand what UiPath actually does, because once you understand their business, their growth story makes much more sense. UiPath is a global leader in robotic process automation. In simple terms, they build software robots that automate repetitive business tasks. Think of UiPath as the company helping other companies save time and money by letting AI powered bots handle everyday work like data entry, document processing, invoice approvals, or even scheduling. Their software can read emails, understand PDFs, pull data from Excel sheets, and even make decisions based on AI, all without human intervention. The company operates in three major revenue segments. The first one is their subscription services. This is their bread and butter, bringing in $878 million this year and growing steadily year over year. This segment includes recurring revenue from software and renewals. Their second revenue driver is licenses, bringing in $757 million. This covers one-time license fees for companies deploying UiPath's automation solution. And their third revenue driver is their professional services and other revenue, bringing in about $43.6 million. This covers training, consultation, and technical support. The key takeaway here is that UiPath's subscription segment, which is the recurring income part, is growing the fastest, which gives the company long-term stability and predictable revenue. Now, let's look at their fundamentals. UiPath currently has a market cap of $7.77 billion and reported about $1.5 billion in annual revenue. It has a price to sales ratio of 5.3, which means UiPath is moderately priced. Not too high like many AI stocks, but not dirt cheap also. Their revenue growth stands at 8.25%, and they have maintained strong free cash flow of $309.6 million, with total cash position of $617.8 million and a total debt of just $79.3 million. That's a very healthy balance sheet, having low debt, strong cash flow, and enough liquidity to keep investing in R&D and buy back shares. And yes, UiPath has been repurchasing its own stock, which signals management's confidence in their long-term growth story. Now, let me also show you their recent partnerships. UiPath isn't just an automation company anymore. They are positioning themselves at the center of AI-driven enterprise automation. Over the last year, UiPath has built an impressive network of partnerships with some of the biggest names in artificial intelligence and cloud computing. These collaborations are a major reason why I'm so bullish on this company. They are not just expanding their product, they are building an entire AI automation ecosystem. Let's go through some of the most important ones here. First up is NVIDIA. In September 2025, UiPath announced a major partnership with NVIDIA to integrate NVIDIA NIM models directly into its platform. Together, they are developing what's called trusted agentic automation, which basically means using AI for highly sensitive workflows like fraud detection and healthcare, but with strong enterprise governance. So companies can now host and manage their own AI models securely without compromising privacy or compliance. Next, we have OpenAI, and this one's huge. UiPath is now collaborating with OpenAI to integrate GPT-5 into enterprise workflows. This allows businesses to build intelligent automation pipelines that use ChatGPT Enterprise directly to perform real tasks, things like summarizing documents, analyzing emails, creating reports, and even taking actions across multiple applications automatically. So imagine an enterprise where repetitive work, approvals, or report creation are all handled through UiPath's AI orchestration. That's where we are headed. Now let's talk about Google Cloud. Back in April 2025, UiPath became part of the Google Cloud Partner Advantage program, and they launched something called the Medical Record Summarization AI Agent. This tool uses Google's Gemini 2.0 Flash through Vertex AI to analyze complex medical documents and drastically reduce prior authorization turnaround times. In simple terms, it helps hospitals and insurance companies process patient data faster and more accurately. A huge win for the healthcare sector. Then we have Snowflake. In September 2025, UiPath partnered with Snowflake to integrate Snowflake Cortex AI into its automation platform. This collaboration connects data and automation, allowing companies to move directly from data insights to automated actions. For example, if a company detects a drop in sales or an increase in customer churn, through Snowflake's analytics, UiPath can automatically trigger an action like sending alerts, generating reports, or even starting customer retention workflows. That's powerful. It turns analytics into execution instantly. And lastly, UiPath's partnership with Anthropic, Inflection AI, and Microsoft. UiPath integrated Anthropic's Claude 3.5 Sonnet model and Inflection AI's enterprise grade systems to bring advanced agentic automation into industries like cybersecurity and finance. With Microsoft, the collaboration goes even deeper. UiPath now works directly with Microsoft Copilot for 365, meaning users can trigger automations straight from within their Copilot interface. On top of that, UiPath uses Microsoft Azure as one of its preferred cloud platform to run its entire automation cloud infrastructure. So essentially, Microsoft and UiPath are building a highly connected automation environment for enterprise customers around the world. These partnerships aren't just for headlines, they're practically extending UiPath's reach into every corner of enterprise AI automation. That's one of the main reasons why I'm so bullish on this company right now. Now, let's switch gears and talk about valuation and stock prediction because this is one of the most important deciding factors when it comes to figuring out whether or not we buy this stock. Based on my stock prediction model, here's what I see for UiPath. They have a current EPS of 0.04, expected annual EPS growth rate of 24.1%, current PE ratio of 400. Using these parameters, the 1 year price target comes to 19.8, which represents about 36% upside from the current price of 14.6. And over the next 5 years, my model projects a price target of $47 per share, which is a 223% upside from today's price. Now, I want to emphasize that all the models are based on assumptions and projections. They are not guarantees, but they give us a fair estimate of where the stock could be if the company continues to grow earnings at this pace. Alright, now let's look at the technical setup. On the daily chart, momentum has really picked up over the last few months, largely because of those AI partnership announcements. The stock is trading above all major EMAs on the daily chart, which is a bullish signal, but still below the 200-day EMA on the weekly chart, suggesting some resistance ahead. The key support levels I'm watching are $12 and $10.80. So here's my plan. I'll slowly start accumulating shares whenever the price shows weakness. I'll also avoid going all in. Instead, I'll buy in batches, maybe 25 or 50 shares at a time. I've also explored selling cash secured puts at $12, but the premiums are too low for this. So it's not the effort here. But buying shares directly on dips makes more sense in this case. At this point, I do not own UiPath shares yet, but it's definitely moving up on my priority list. To wrap up, UiPath is quietly transforming from a pure automation company into a full-fledged AI infrastructure player with strong partnerships, healthy financials, and consistent subscription revenue growth. It's building a solid foundation for long-term expansion. From a valuation standpoint, it's still relatively undervalued compared to other AI names. And from a technical standpoint, it is at an attractive entry zone for long-term investors. For me, this is a screaming buy on weakness and it definitely deserves a spot in my portfolio. Now, I want to know your thoughts. Do you own UiPath? What's your long term price target? And how do you see their partnerships shaping the future of automation and AI? Drop your thoughts in the comments below. I always enjoy reading your analysis and insights. And as always, thank you for watching and being a part of the mindful investing journey. If you found this video helpful, please give it a like and subscribe to the channel. It really helps push this kind of content to more long term investors like you. That's all for this video, and I'll see you in the next one.